We'll wait for 5 minutes, ma.
Okay, ma'am.
Because only you have joined.
Yeah.
We'll see in the previous class how many students are there.
I think 5 members, sir.
Okay, okay. I'll wait for 5 minutes, ma. Then I'll start my class.
Okay, ma'am.
Okay, Kalyan, we'll start the class.
Yeah.
Okay. And the last classes, I have taught you that the previous so here we have transaction we have did. Now in next we are going to how we will be posting the transaction from cash book to the ledger. Okay. So in this ledger, we always whatever the items, all the items on the debit side of the cash book must be transferred to the credit side of individual. So here our individual ledger should be prepared. For example, there is a cash book. Cash book is an individual, whether that is in the debit side. So all the items where on the credit side of the cash book must be posted on the debit side. Means whatever the thing. Then next I'll show you this one. See, here a limited company purchases goods worth 2,500 from B Limited on credit side. So what the transaction we have to, B Limited has taken the goods that he purchased the goods from A. That is B Limited account data to cash. Is it? That is the worth of the rupees is the cash. So A Limited makes a payment. Means here A has purchased the goods. So B Limited must get the, because he has A Limited purchased the goods from whom? From the B. So B must get the cash. But here A has purchased the goods on credit. Are you getting my point?
Yes, ma'am.
So here in the next, A Limited makes a payment for the goods next month. Means when he is purchasing the goods, at the same moment he is not paying, because he has taken the goods on a credit. Is it? That he is paying in the next month. So what are the things you have to write the entry? Purchases account data to B Limited. B has purchased that, and B is getting the goods. Means B has to get the amount. Means he has a purchase. So here, A Limited purchased a machinery worth 30,000 by paying cash. So here, what is he has purchased the goods, but he is paying the cash. So machinery account data to cash account. So here, machinery is on debit side, cash is on a credit side. Are you getting my point?
Yes, ma'am.
So when you are writing the individual account, machinery account, when you are writing the machinery account, that account it will be getting on where? On a cash machinery account you are making. So on the debit side, cash will come.
Okay.
Okay. When you are making the cash account, machinery will come where?
Machinery account.
In which side it will come?
Debit side.
Credit side.
Credit side.
So machinery account data to cash account. Are you getting my point? Yes. So A Limited received rent on building, that is 1,500. Cash account data to rent received. Means A is getting the rent. Cash is getting. Rent is a receivable.
Yes.
Now, journal. Journal is a book of prime entry also, called the book of original entry. Journal, what I have said, generalizing, whatever the things you are getting. Yeah. Generalizing means it is an original book. If at the time of the income tax, if you are not able to pay the amount, if your any entry is missing, at the time you will be going to the journals. That is a day-to-day transaction. Okay, that is the transaction are first entered here and is the most important book of account. Most important. So whatever the thing you are making day to day, means on first you are purchasing, on first you are selling, like on first you have written, means whatever the transactions on the particular day that will be written. Okay, then the transaction are recorded systematically and in the chronological. Just I told no, just I have said, means one is the date wise and even the time wise, chronological. So in the morning 9 o'clock you have purchased, and in the morning 10 o'clock you have sold. Are you getting?
Yes, ma'am.
That is a time wise also you must be make. They are entered to show which account should be debited or credited. Just now in the previous, I have shown no
Yes.
purchase account data to B Limited. Purchase is the debit side. Limited, B Limited is on a credit side. Are you getting?
Yes, ma'am.
And they are entered to show which account should be debited or credited. Recording of a transaction in journal is called generalizing the entries. So depending upon the generalizing the entries only, you have to post the same thing in a ledger. Okay. A journal is derived from the Latin word jur, which means a day. The transaction are first entered here and then subsequently it will be posted into the another account book, that is a ledger. Is it clear?
Okay.
So the foremost important thing is the journal is a very important book. That is an important book of accounts that will be recorded in a systematically and chronologically. And that is whatever recording the transactions you will be making, that is in a general book. Journal, it is also called the generalizing the entries. So whatever the generalizing the entries you make in a journal, that will be subsequently posted into the another account book, that is a ledger. Okay. Then generalizing the process. Generalizing refers to record the business transaction systematically and in summarized form in the journal. Summarizing means you have to summarize that. That is machinery account data to cash account. Means machinery you are purchasing, that is for cash. Means you are summarizing it. That is, which should be a form of a debit and credit in the journal. See here, this is a pro forma when you are making the journal. So date, particulars, LF, debit, credit. What is the LF? Can you tell me? Ledger folio.
Ledger folio. Okay.
Okay. And so yeah, this is a pro forma. That is just now I told no machinery account data to cash account. Machinery is on debit side, cash on the credit side. Means the narration what you have to, being the machinery was purchased from B. Like narration you have to write. Just a posting is not the important. Narration also you have to write from where you have purchased it. So significance and expression of the column, just now you know, no? These are the particulars, what you have to on the first line, you have debit and the credit, you have to mention it. Next, generalizing also, the first step is where the process in the generalizing, the first step is, first you have to determine the two accounts, whether it is a single entry or the compound entry, that is the transactions, you have to make it. And then the second step means first is that the procedure you have to make, that is analyze the transaction under the head of debit and the credit. And that should be written in the journal entry. Okay. Journal is called the journal entry. So for this, you have to follow the some steps. First one, you have to, first there should be a two account. Just now I told no, the machinery, Ram has purchased the machinery for cash. So here, what are the things? If specifically in the entry, if it is mentioned that it is a cash, means you have to mention in the journal that is a cash. If it is not at all mentioning any cash, only the person name is given. Ram has purchased the machinery. Means that you have to analyze it that he has purchased the machinery on credit. Are you getting ma? So you have to categorize that there should be a two accounts. One is a single entry, then the other one is a compound entry. That is affecting the transaction. That is machinery account data to cash account. So here machinery you are suppose I'm purchasing the machinery. I'm getting the machinery, I'm paying the cash. So from me, cash is going. I'm getting the machinery. So here two accounts are affecting. One is a machinery account, other one is a cash account. The first step. And the second step, that is a classifying the above two accounts under personal, real, or the nominal you have to. So it is a real account. Machinery account, it is a real account. And you have to determine the character of the accounts, whether it is in which account it is involved. And third step, you have to find out the regulation of a debit and the credit is above the two accounts where it is involved. And in the fourth step, you have to identify which account is to be debited and which account should be credited. That is in a generalizing in the single entry. Kalyan, are you getting ma?
Yes, ma'am.
Next, in the fifth step, you have to record the date. So without the date, if you are mentioning, that is a very, means you can also omit it. If you're not mentioning any date or anything. So date column, the transaction, when you are recording the date, the transaction in a date column. And in which year you are purchasing, the year also must. Okay. So written once. So here in the, suppose each and every time no need to write the year. Once if you write in that month, that year will be continued. Once till they change it. And the sequences of the date and the month should be strictly maintained. And the sixth step is you have to enter the name of the account where it is debit the particular column that is on the left side, and whether it is in the abbreviate that is a DR. That is a machinery account data to cash account. That is in the same line you have to mention it.
Okay.
See here, machinery account data to cash account. So in the same line, you have to write that is in the cash machinery account 1 and debit side. And you have to give the narration. Okay.
Okay.
And then it is seventh column. You have to, that is in seventh step, you have to first line starts with the 2. When you are finished machinery account data, 2 means in the next line, you have to write the 2. That is a margin or in the particular column against this amount to be credited is written in the credit amount. And step 8, write the narration. So how, just now I explained, in the same way you have to make it. And the next you have to draw, that is the last step. That is you have to draw the line entry that is across the entire specifics column to divide one journal entry from other. See here, paid rent 4,000, sold goods to Harish 10,000. So here paid rent account data to
Cash account.
cash account. See here, date is mentioned.
And year is also.
Year is mentioned. So in the next column, I have not mentioned any date. That is year I have not mentioned.
The date and month.
So if that month, you can write the year. If you again you are going for the next month, again you mention it.
Okay.
So here sold goods to Harish for 10,000. Means you have sold the goods to Harsh. Sorry, Harsh. That is a 10,000. Means you sold. That is Harsh account data to sales account. So in that month, I have made only 2 transactions. I made the total of that month. Clear?
Yeah, clear.
This is journal entries. That is, I have not written all entries. Just commence business with the capital. Commenced business with the capital means what?
capital, పెట్టుబడి, I think.
Yes, that is where you are investing. Cash account data to capital account. So this type of questions you'll get in exam.
Okay.
First, you have to generalize it. Okay. Next. Differences between the journal and the ledger. If you want to take that is in journal, what are the things? Just whatever the explanation I have given. First, it is a original entry and the ledger is a second entry. Okay. Transaction recorded, that is will be posted next to the ledger. And transaction, that is form the basis for the entry to be made in journal. And the entry made in the journal is a basis for the ledger account. And all the transactions are recorded in the chronological. Here in the ledger also, they have the particular account in the ledger. Missionary account, it is a particular account. Means in the particular book, you have to write at month, whatever the date you have made all the transaction and maintain for recording the transactions. So your journal is making the entry for the transaction and you are maintained for analytical purpose, analysis. Okay, whether it is a cash or it is on a credit or it is a return. Okay. Now, subdivision of journals. In this journal, subsidiary, that is subsidiary books. Just now I have told you that they have the many accounts. Whether you have the subsidiary books means subdivision of journals. Means in the journal, you will be writing all the entries, whatever the entries, that is sales also you'll write in the same book. Purchases also you will make, rent, salaries, depreciation, many more, insurance, many more things you will be writing in a subsidiary book. And you will be maintaining the record. That is similarly natured transaction. Similarly natured transaction means that is in a date-wise, that is in a chronological order you will be making. And from that journal, again the content will be recorded in the subsidiary books. That is define the subsidiary books. These are the subsidiary books, that is record the transactions which are similar in nature, that is orderly manner. That is special journal or day books. In big institutions, whatever the big institutions we have, it is not easy to record all the transactions in one journal book. If it is a small book, a small business, you can easily make it. But it's a big business like TCS, Ambani, like Hindustan Liver Limited. They are the very big business institutions. So it is not easy for them to record all the transaction in only one book. So posting them into the various books. So small books means in the small books, you can make it the journals. But big business, you cannot make it all like that. So that's why you will be making the subdivision of many subsidiaries. So here we have the 8 subsidiary books. Cash book, purchase books, sales book, purchase written, sales written, bills receivable, bills payable, and journal proper. These are the subsidiary books. That is a subdivision into many subsidiary books. Got my point?
Oh, yes.
Now, first book is a cash book. Is the first and most important subsidiary book is the cash book. It records all the transaction, whatever it is related to cash only. If you are purchasing all the goods in the cash means all the transactions should be written in a cash book. If I am making any credit of purchases, that will directly go to the purchase book. That is credit transaction. Cash, whatever the cash is related to the purchase, that is subsidiary books, that all will be written in the cash book. And it records all the transactions related to the cash, bank, that is receipts and the payment. Whatever the receipts you are getting means whatever the things you are getting in a cash, whatever the payments you are doing, that is through the cash, through bank also, everything will be written in a book. So in this cash book also, we have a single column, double column, triple column, and petty cash. So in the cash book, we have 4 types of a cash book. Single column, double column, triple column, and the petty cash. Okay. So first we are going to see the single column cash book. A single column cash book, it's look like a ledger only. See here. It will be divided into 2. What is on a debit side? The other one is a credit. Date column, particular column, LF, amount. Again on a credit side, date, particulars, LF, and the amount. That will the format that is on all the cash receipts are recorded. Means whatever the receipts you are getting, from where you are getting the money, that all you will be writing on a debit side. If you are making any payments, that you will be writing on a credit side. So in all the cash books, you have to maintain the same system. Whatever the things you are getting, if you are getting the money, whatever you are receiving, that should be written on a debit side. If you are paying to anyone, you are making the payment in the bank. If you are paying to a person, if you are paying to the LIC, insurance, that all should be written on a credit side. Okay.
Okay.
So here Ram has purchased goods. Means purchases account data to Ram account. So here, purchase goods for cash. So purchases account data to cash account. Purchases account data to cash account. So purchases has come on a credit side.
Right.
And next one is cash account data to Ram account. Ram received the cash. Ram received the cash. Means cash account data to
Ram.
Ram. So that is a 2, it is come on the debit side. Okay. Next we see in the double column cash. See a single column, it is like a same ledger. When we go to the double column cash book, in the double column cash book, see a same, you have same date, particulars, LF, but next is a discount allowed on a debit side, discount received on a credit side. Only this discount only will comes in a double column cash book. Okay?
Okay.
Next is a triple column cash book. Triple column cash book means there you have the triple column cash book contains all the columns of a double column cash book. Only the extra column is a bank. See here. Cash and the bank. Yes, Kalyan?
Ma'am.
Is it clear?
Yes, ma'am. Clear.
So yeah, all the things will be the same, but only the extra is a bank. Why we are taking this bank means whatever the payments, if you are doing through the bank, that is through the check, that amount will be written in a bank column.
Okay.
Next, purchase book. Purchase book is a subsidiary book that is used to record all the transactions related to credit purchases. Credit purchase means you have not made any transaction with the cash, only on a credit. That's why you will be writing in a purchase. If you are next is a see here, date, particulars, inward voice. There you will be writing now. If you are giving on a credit means one number will be there. that number they have to write on a receipt. If you are taking on a credit, yes, Kalyan?
Yeah, ma'am.
Then ledger folio and the amount. Next is a sales book. Here, the sales book record all the transactions where it is related to the credit sales only. The sales book cannot record the sale of asset. In the sales book, you are not going to write any sale of asset. If you are selling the asset, that you will not be writing in a sales book. Next, purchase return. Next book is a purchase return. You have purchased, but there is a damage in your book. That is in your material, there is a damage. Then you will be returning made to the supplier from whom you have purchased. You will be writing again. That is, you will be returning back. So the purchase return book, also known as the return outward book, is used to record transactions of all the returns made to the supplier. A debit note is issued against the every return and is recorded in the purchase book. Just know a outward invoice number you'll be writing now.
Yeah.
In the purchase. Debit note.
Debit.
None. So here, inward voice number you'll be writing now.
Yes, ma'am.
So that number in here you'll be writing. To know that from where it has returned. A debit note is issued against every return and they recorded in the purchase return book. Okay?
Okay.
Next, sales return also same. Date, particulars, credit note, LF, details, amount. Bills receivable. Whatever the bills you will be getting from the bills drawn in the favor of business. In the favor of business, if you are supplying the raw material, you have given the raw material. So first you have given on a credit. Again, you'll pay no. So that is on a bill receivable. That all the transactions you will be writing in a separate book, that is a bills receivable book. The total of bills receivable book is posted on the debit side of bills receivable account. Okay?
Okay.
And the bills payable. Suppose if you are doing the business, if your sales, you made the purchase the goods and raw material, you have to pay the amount. That will be written in a bills payable book. The next is a journal proper. These are the certain transactions that cannot be recorded in any of the above mentioned. Means miscellaneous transactions. It is termed as miscellaneous, that you cannot maintain in a bills receivable, nor in the payment payable, or not in sales book, purchase book, or in a cash book. So these are the things where it all the transactions. So the journal proper is used to record all the miscellaneous transactions. It includes what are the transactions means: get credit purchase, sale of assets, depreciation. Next is the advantages that you can read from your book. So here, suppose you have purchased the furniture from Kuntala house. So how you write furniture account data to Kuntala house? That is, furniture is a debit, Kuntala is a credit. So being furniture purchased on credit. This is the narration.
Okay.
Interest on capital. That is, interest on capital is paid from the capital account. Interest on capital account data to capital account. See what the narration I have written here. Being interest on capital provided at the 10% on capital.
Okay.
Okay. What is the meaning of drawing account? Drawing account, it is nothing but where you are using the amount from the business. If you are taking the amount from the business for your personal purpose. I have drawn, means I have taken the money from the business. How I have to write in the ledger? That is in journal proper, how to write? That is a drawing account. Whenever you are drawing the amount from the business for your personal use, then you have to write the entry like this.
Okay.
Then sales book. Sales book also, you will be writing that Bahubali and company, they have sold the goods for 89,000. That they'll be maintaining the 20% discount on this amount. You have to take it. 89,000 minus 17,000, it is a 71,200. And Katappa, again, he has made the sales, that is account of a 64. So by the end of the month, what is a sales account? The sales account is a 1,35,200. So in the same format, you have to. So this one, the last, whatever the total you are getting, this total amount, again, you'll be taking to the trial balance. So next is a petty cash. Over? Understood what I'm telling, or I'm going very fast?
Okay, understanding, ma'am.
I'm not going very fast?
No, ma'am, it is. Understand.
So next is a petty cash. Petty means a very simple, very less amount. So in a business, there will be a large transaction. A number of petty, small payments. They have to do every day. Suppose I am the cashier. So for each 10 rupees. Now load has come, or suppose I want the stationery. I want a stationery, I needed 100 rupees. So for the 100 rupees, I cannot go to the manager and I cannot ask him, sir, give me the 100 rupees. I have to pay to the transportation or arranging the refreshment like that. So don't want to make a merry mess in a, in a business. So they will be maintaining they will be maintaining one petty cash book. That petty cash book will be maintained by a petty cashier. Means he'll write only that simple things. So once in a month, a lump sum amount will be allotted to the petty cash book. That is for the business purpose. So that will be written on a debit side of a petty cash. So all the entries, whatever the things it is made, all will be recorded on a payment side and make it the ledger. See this. Just this one is a question, and this one is a book. Just you go through. Go through, ma.
Yeah.
So petty cash. How much amount they have issued?
So issue 500, ma'am.
500.
Yes.
So that 500, whatever the amount it is allotted, that will be written on the debit side.
Oh, debit side.
And the other things, whatever the amount they have paid, means it is going out.
Oh.
So that will be written on a credit side.
Credit side.
So that is a by carriage, stationery, coolie, traveling, refreshment, postage, sundry expenses. These all So these all are the amount what they have made, used. So, say 10, uh, 10, 25, 30, 80, 90, 100, 102. So how much the amount in that month have used? 102 have used. From that amount should be minus from the 500.
Okay.
So still how much amount I'm having?
398.
398. That 398, I will be forwarding the same amount in the next month.
Next month.
That is a balance brought down. And again, that month also, they will issue some amount. So bringing it down, and again, you are spending it.
Okay.
Next is the trial balance and rectification of errors. So at the end, so just now I have showed all the subdivision of books. So at the end of the financial year and other dates, the balances of ledger accounts extracted and written up into the statement. That is a trial balance. So we have bills receivable, sales, cash, all the things we made up. So from that, whatever the amount is, how much amount it is issued, how much amount is used, that you will be writing in a one book that you have to make it. So your trial balance, it may be that is defined as a statement of debit and the credit totals or the balances extracted from the various accounts. So that will be any errors. It will reveal all the errors and the mistakes which need to be identified and it should be rectified. And the objectives of trial balance, to have a balances of all ledgers, whatever the amount, that should be made ready a reference. And next is whether it is verifying the double entry for each identical transaction properly recorded or posted, that you have to see it. And the check of the arithmetical accuracy of the debit and the credit. Limitations. Yeah. Cash. What is a cash? It is a debit. Capital, it is a credit. Bank, it is also debit. Furniture, debit. Purchases, debit. Mr. Rakesh trade account is a credit. Advertisement, debit. Sales, it is a credit. And rent account, it is a debit. Wages also debit. So wherever it is debit, you will be writing. See here in the next from this, you will be all the debit 2 columns. So you're making one is the name of the account, debit balance and the credit balance. So debit and credit. In the debit, you will be writing this amount. On the credit, you'll be. So this trial balance should tally. It should come to the same answer. Okay?
Okay.
Next. Rectification of errors. Now, rectification of errors. The accountancy is communicate the true and the fair result, where you will be obtaining from the financial transaction. That is interested parties. Who are the interested parties? Shareholders, investors, creditors, employees, government, etc. So if you are making error, what is the difference between the error and the fraud?
Um, fraud means it is intentionally
Intentionally?
కావాలని అది చేసింది మేడం. ఎర్రర్స్ అంటే బై మిస్టేక్.
Error means?
By mistakenly.
By mistake. So that by mistake, whatever the thing we made, that can be rectified.
Yes.
So here, if errors are committed in the process of bookkeeping and the objective cannot be achieved, therefore, due care should be taken for avoiding any errors or rectifying the error. If committed for ascertaining the correct profit and financial position and objectives of rectification of errors. First, you have to preparation of correct accounting records. First, accounting records you have to make. Then you have to make the ascertainment of the true profit or loss for the accounting period by preparing the profit and loss account without any errors. The next, whatever the gross profit, whatever the net profit you get, that will be transferred to the balance sheet. So the true financial position where it is concerned, and you have to make the particular date for preparing the balance sheet without any error. If the balance sheet is not tallied, means there should be some mistake. So to tally it, again they have to go to the journal. Again, they have to go to the journal, and from the journal, each day they have to check it with the ledgers. Is it clear?
Yes.
And next is we have a types of errors. First one is error of omission. Omission means leave out or exclude. If the bookkeeper omits or leaves out the transaction without entering, that is omission. Means by mistakenly you will be omitting.
Yeah.
And in this omission also you have two types. That is one is partial, complete. Partial means only half of the part you will be omit. Complete means you completely you'll remove it.
Yeah.
If the transaction is partially entered into the book, then the error is called partial entry. Next, that is the transaction. Here I have given you properly. The transaction is entered in the subsidiary book, but it is not posted to the ledger. Means in the subsidiary book, you have written entered in the subsidiary book, but not posted in the ledger. And credit sales entered in the sales book, but not posted in the debit of the customer's account. Means in one book you have written sales account data to Ram account. That is a customer. So in the sales book you have written that is Ram has given. But in the Ram book, you have not written any sales book. That is partial only you made. Got?
Yes.
So in the same way, in the purchase book also, but not posted on the debit side. Means from the supplier you have written, and the debit side you have forgot. Means only one part you have made. And next is a receipt side of the cash book, but not posted on the credit side of the asset book. That is the sales. When you are making any sales, the receipt side you will be making, but the asset side you have not posted. Next is a complete omission. Complete omission means if the transaction is completely not recorded in the books, then such error is called complete omission. Means, for example, a receipt is not entered in the cash book. Means completely you have written removed. Such omission should be carefully identified and rectified. Means in the journal proper it is there, but when it comes to the cash book, it is not there.
Okay.
Then error of commission. When something that ought not to be done is being done, then it is called the error of commission. Such mistakes are committed out with the ignorance. No proper understanding. Negligence. Negligence, that is a commission. Negligence of a bookkeeper. The following are the few examples. We have error related to the subsidiary book. That should be written. Entering wrong amount into the subsidiary book. See here. Commission, that is errors relating the subsidiary books. Entering wrong amount into the subsidiary book. For example, a sale of ₹1,000 may be entered in the sales book as 100 due to wrong reading of figures. So you have to write the 1,000, but by mistake, what you have written? 100. Next, entering the transaction in a wrong subsidiary book. For example, a purchase transaction may be entered in a sales day book, and vice versa, bills payable transaction may be entered in a bills receivable. Ardhamena? Next, third one, wrong casting of a subsidiary book. The subsidiary books have to be total periodically, means day-wise. That is daily. And the totals are posted in the concerned account in the ledger. The totaling of day books periodically is called the casting. Mistake is committed while totaling that day book. Such mistake will call the error of casting. Got my point?
Yes, ma'am.
Suppose you must get the total of 5,000. What? By mistake, you will be written as a 490. That is error in casting. When there is an excess total, it is called overcasting. If you have to get the 500, but you have written 520.
Right.
Overcasting. And when there is a short totaling, it should be under casting. Error related to ledger. The bookkeeper commits the errors relating to ledger, that is posting. See the first one. A bit chudandumma.
Okay, ma'am.
A. Posting wrong amount on the right side of account. A purchases ₹551 from X. May be entered as a 155 in his account. Purchased with how much amount? 551.
551.
But in his books, what did he write? 155. Okay. And posting the correct amount to the wrong side. That should be wrong side means A purchased ₹551 from X must be entered on a debit side. Must enter on a debit side of X. But wrongly, you have written on the credit side.
Yeah.
So posting the same amount twice to the account, A purchase of ₹551 from X entered the twice on a credit side. Posting wrong amount to the wrong side, the proper account, the purchase of 551 from X is entered as a 151. That is on a debit side. Error of principle. These are all the things where accounting, principle, concept, convention, and in this, capital expenditure wrongly treated as a revenue. That is capital expenditure you are making, but revenue means furniture, purchase of furniture wrongly entered in a purchase book instead of debiting that in a furniture account. And the next is the revenue. Revenue expenditure treated as a capital expenditure. When you have to make the routine, that is a machinery debit to the machinery account. So like this, you have to make it. Just to go through in your textbook. So we'll see the next class.
Okay.
So what is the next unit, ma?
Next is
I think till now we have completed our block 1.
Block 1. Okay.
Over now?
Yes, ma'am.
What is the block 2?
I'll tell you about. The final accounts, ma'am.
Okay. That is a balance sheet.
Yeah, preparation of profit and loss account, preparation of balance sheet and introduction of company accounts, preparation of company final accounts.
So next week, I'll go with the final accounts.
Okay.
Okay, ma?
Okay.
It's clear till today, this one?
Yes.
I have missed the 2 classes.
3 or 4 classes, ma'am.
No. This is 3rd class.
Third class.
Yesterday I have not taken, and the last Sunday also have not taken.
Okay.
The two classes I'll be taking in the last, after completion of the 10th.
Okay, ma'am. Before holidays, ma'am, class before NAC team వచ్చినప్పుడు పోస్ట్పోన్ చేశారు కదా మేడం క్లాసెస్ ని.
ఏంటన్నా?
NAC టీమ్ యూనివర్సిటీకి NAC టీమ్ వచ్చినప్పుడు పోస్ట్పోన్ చేశారు క్లాసెస్ ని.
అవును, అప్పుడు పోస్ట్పోన్ అయ్యాయి.
అవి ఎప్పుడు ఉంటాయి మేడం?
తెలియే, మీకు 10 క్లాసెస్ కదా.
ఓకే.
10 క్లాసెస్ మీకు కంప్లీట్ అవుతాయి.
కంప్లీట్ అవుతాయి. ఓకే.
సో ఇప్పుడు 10 ఇప్పుడు యాక్చువల్ గా 5 క్లాసెస్ అయినట్టు ఈ రోజుకి. సో నేను 5 క్లాసెస్ లో నేను ఓన్లీ 3 క్లాసెస్ తీసుకున్నా. సో దట్ 2 క్లాసెస్ ఐ విల్ బి టేకింగ్ ఇన్ ద లాస్ట్. Got my point?
Yes, ma'am.
Okay, we'll see you next week.
Okay.
Just inform your friends also, ma. Group unte.
Okay. Sure.
Okay.
Okay. Bye.
Okay. Bye.